Welcome to the Trading Pit, your virtual gathering for sophisticated traders. It's January 16th. Now that the Bitcoin ETFs are live, we're asking, is alt season on its way? This is Marconi White. Today, I'm joined by two of my favorite analysts, JJ and Ben Lilly, who are going to decode the markets, where it's going next. You're not going to want to miss this. I'm going to do a deep dive into analysis with JJ, but first, we got to take down the music a little bit because I want to give a special shout out to CoinCall, who is sponsoring this video. Now, if you don't know, CoinCall is committed to unlocking the full potential of cryptocurrency trading by making options and futures understandable and accessible to everyone. They offer a full suite of options, futures, and spot trading of your favorite crypto assets with competitive fees and an elegant interface. And to give you an idea of how to use CoinCall, JJ is going to be premiering his DJ trade of the week. You're not going to want to miss this, but you're going to have to hear our breakdown of the market first. So if you I can't even talk and I'm so excited. I can't even get these. That's all right. Okay. So if you've gotten anything out of listening to us for last year, or maybe even just the last couple of shows, please use the link to trade on CoinCall as a means of supporting our work and keeping the show going. The link is in the description below. All right. Let's get started. JJ, as we do every week, I'm going to start with Bitcoin trading just around 43K, at least last time I looked. I want to know, what is the mood of the market? Bull, bear, or boring?
I'm going to say bear. And I know it's not going to be a popular opinion right now, but this looks like pretty clear distribution to me. So on the chart we see here.
Way to kick off a new week in the year with some excitement. All right, break it down. Why are we heading down into a bear? Last week you were on bull. You were on Planet Bull. What's going on?
Yep, things shifted. So like we said, it was going to be confusing during the ETF. There was going to be a lot of uncertainty. You shouldn't have been in a rush to do anything one way or the other because that was going to be some kind of crazy price action, which we saw. We moved all the way up to 49K, and then we saw those bids get filled and basically just free fall down ever since the past couple trading days. And now we see this high volume break here, right? So we made this top, and then you just see this massive sell pressure all the way right down into the 50-day MA, which is where we're currently sitting. We see we lost the 50 RSI mark here on the daily chart. And this is pretty crucial because look, this is a trend we've been riding up since October. So in October, we saw a huge volume breakout above the 50-day MA, or above all day MAs, and also the 50 RSI mark. And that's really what drove this trend. So we were riding that trend the whole way. You see it never broke. And then on Friday, we broke this on high volume here. And it is just not, it's not looking favorable to me. I think people are in too much of a rush to buy the dip here. You have to consider where we are. It was basically 5 straight months of nothing but up only, right? And now I think we're due for some mean reversion here. We'll get into the Dixie later. That's showing some strong risk off signals, as well as there's just kind of been, let's look at this too. So if we look at the long short ratio here, we see basically ever since the 11th, right at the top, longs have just been climbing into positions. It just seems to me like people are too anxious to buy the first dip that they see. And I don't have so much confidence that price is going to rebound from here. I think we could get a squeeze back up to 45 to 47K or so, but I do think that'll be a bounce worth selling into the end of month if we get it.
So last week on Thursday with you and Benjamin, we talked about the fact that the buy the rumor, sell the news had already happened potentially, right? We were seeing some odd signals in the market. And then by Friday, we had kind of seen the sell-off. So I think we've solidified this was a little bit of that movement that happened.
Yeah, definitely. Like you see the volume here, right? This is sell the news. So you have to think how much, and we hit on this about a month ago too, how much supply was unlocking when Grayscale converted to an ETF. Over 600,000 Bitcoins that were locked up in this toxic product could then be sold for par value. So those people who had been underwater for potentially years finally had their chance at exit liquidity, and they took it. And that's a normal thing. I think it's actually healthy for markets to reset. I'm not saying, that's it for Bitcoin forever by any means, but we're due for a cool down, and we're seeing this on the charts. So I'm just
ETF is on the table. It's time to exit. It's time to move on to TradFi. That's where all the action is. Okay, so the spot action looked like we had a bit of a sell off. As you're saying, the RSI looks like we're heading for a little bit of consolidation. Any indication of how long that consolidation may last? Weeks, months, going into the halving? How long?
I'm kind of the mental model I have in my mind right now. I think we're kind of back in where we were in August. So probably about 2 months or so of downward chop consolidation or whatever you want to call it. I think we're going to be reverting lower. Maybe retest this 200-day over the course of the next couple months and then consolidate a bit. And I think we'll be back into an uptrend by the spring. But I think we have some lengthy consolidation here ahead of us.
So the spot saw a sell-off. The perps are looking like there's a little bit of froth coming in with too many people trying to get in long early. What about on the options side? Is there any indicator of where we head next?
The options market's volumes have just kind of fallen off a cliff since the ETF announcement. So you could see this in the implied volatility. Basically, we were just ramping up since October. This went from 36 or so all the way up to 75 at the peak last week, 78. And now we see that reverting back too. So the options market isn't really active right now. It seems like they're waiting for some price digestion to start placing bets. So I think that kind of fits with the overall narrative that prices just become overheated in recent months and it needs some cool down and compression here for the next few weeks.
What's your thinking there? Was this what you anticipated was going to happen on the option side?
Yeah, it's natural, right? So the options market tends to be ahead of the curve. So we see they started placing bets for this ETF trade back in October. The implied volatility levels went through the roof. And then when the event finally came, you see they basically exited their positions on Tuesday. So 2 days before the ETF even went live, they were already exiting, taking their risk off the table. They had that massive run up, and options are a zero-sum game. So you can't really leave it riding for that last hope that maybe you get above 50K, maybe you don't. So they de-risked, and I think that was the right call, obviously, based on what price has done since. And they're just waiting for some kind of consolidation period, lower implied volatility levels, et cetera, to probably enter.
Okay.
But that was the overall driving force of this whole move up too. So we even see that on the Bitcoin chart. Remember this break? This was the big gamma squeeze above 30K, and you see it in the volumes. So every time those options that were being sold got squeezed, the people had to buy spot to cover. And then there's people short. It was kind of a perfect storm. I had a tweet about this on Friday night. Is we basically ran out of shorts to squeeze above 50K because nobody wanted to stand in front of the train there, right? Like, who knows? Maybe it could rip to 60 after the ETF. It was possible that it could have. So the risk reward there wasn't enough for shorts. Could have went too high. So when you run out of shorts to squeeze, the downside of that is you lose the acceleration effect. So anytime you see these parabolic moves like we were seeing throughout October to December, these were led by short squeezes, because when shorts get squeezed, they have to buy back their position, which drives price higher. So we kind of ran out of that dynamic, spot distributed, and then we just kind of chopped downward into the end of the week. And I think that's going to continue.
So everything is, as you're pointing out, is looking to some amount of consolidation at this moment. I want to get Ben Illy in here. He's remaining kind of quiet, which terrifies me. But before I do, I want to ask you, we oftentimes has looked at the whale accumulation chart. What is that looking like right now? Are they still buying at this level? I think last we looked at it, maybe they had pulled back a bit.
Yep, it's been distribution since December 20th. So they basically used that big rally above 44K to start unloading all this supply they bought up in the past year. See it here. So you see they were buying basically since the first 30K break. They were loading up, and now we just see them distributing that. I don't think we'll see them active again until we're back below 40K at least.
Okay. Well, Ben, jump in here. What do you take about the picture that was just painted by Picasso JJ, looking a little bit bearish?
Yeah, happy to be here. Happy to start a new week. It's going to be interesting here with the open. Kind of happen in 5 minutes to see what happens with the TradFi Open when it comes to all these new ETFs. Is the volume going to start showing up here? Are we going to start having to schedule all of our trading days around these volume surges during the New York session?
Yes.
Yeah, I think so too, right? Like, I think there's going to be a lot of ARB that happens on the open and on the close when all these ETFs need to basically come back to NAV. So this week, I believe, is going to be a little bit of a kind of feeling out period for how this new market structure is going to look like for the next few months. As far as everything outside of that, with what JJ said, as usual, I can't really disagree much on there. I mean, 40K, I think I wrote about it last week. Like if we want to see volatility kind of spike, which I think that event really does need to take place here. So right here, I got the term structure. This is how you measure how much pricing is being attributed to the amount of volatility and the expectation of volatility in the market. So the higher this goes, essentially, it's a risk premium. The market wants to buy insurance. That price is going to whipsaw around, and typically that happens to the downside. So they buy this insurance premium to the downside. So you see this price go up. That means there's a bit of a rush to go ahead and start hedging yourself. And the dark blue line right here, this is a snapshot of what that essentially insurance looked like on the 9th, so about a week ago. And the light blue one is today. Okay. And we had a sell-off just take place, late last week, and we see implied volatility lower, right? That's really shouldn't be the case here.
Mhm.
So I would expect this to get kind of jacked up here in the next week or two.
That was a really odd
the
anomaly how we had
technical
that. There was that large spike in implied volatility into the news event, which was just basically bait, where you had juiced up premiums and people that were playing options well stepped in front of that and just captured it all. And you saw it just fall off a cliff
Mhm.
once the ETF basically went. Like that's your perfect summation of buy the rumor, sell the news. So you had that huge run up in IV, but it was running basically since October. So October was when you want to buy the rumor and then get out of position by the time the event actually happened.
Yeah, and it got
Mm.
whacked down pretty quick. As
Mhm.
soon as it started spiking, it didn't last
Institutional
long.
adoption. That's what it is.
Mhm.
They'll capture all that upside that you give them for free. Take
Yeah.
it.
I saw. I'm curious what you guys made of the actual launch. Back there was several trillion, then coming. I think
I've
bringing
seen
brought
that
down
number
to
change like
700 billion. Yeah.
10 times. So like I just find it to be unreliable data. Like there's not much you can really do with it because it's changing each day. So who like they're saying one day it was X amount and then the next day, oh no, it was actually lower or higher than expected. It's just kind of it just seems like bait to enter a long or short position. So I'm not really reading too much into it. I don't
Yeah.
know. Don't know
It's
how
a
much you
fire
can trust
hydrant
it.
right now coming
Yeah.
at the market in terms of data. And not everybody knows how to take that data and maybe digest it the way it's supposed to so they can go ahead and make those analytics and be able to make decisions off of it. I think that's going to take a little bit of a time. Once we kind of see some more filings come in and see a lot of these entities go ahead and publish the documentation that we can kind of look at to see, hey, this is how you're supposed to interpret the data, or I was doing it all wrong. And so let's go ahead and kind of recalc it and run it again. That's going to take just a little bit of time. So understanding that there's going to be a little bit of confusion, not intentionally, perhaps. Maybe it is
Mhm.
intentional. I'm not sure. But I would say kind of stick to your guns for a little bit on how you interpret the market and the data and stick to it until that kind of all that information and data gets sorted out.
Yeah, you're throwing darts in the dark if you're trying to base something off data that didn't exist a week ago. We'd have no idea how
Mhm.
that affects the market. It'll take a while for those signals to register.
What do you guys make of the non-BTC part of the market? Ethereum, the rest of the top 10, the L1s. You mentioned JJ, this looks like a period of consolidation. Is this an opportunity perhaps for some amount of an alt season to hit?
It is if BTC keeps range. So as long as BTC is in like this 42,000 to 46,000 region, I would expect the BTC to keep chugging along. But if BTC breaks out above 47,000 or below 42,000, I think we'll see this revert back towards the lows, the BTC ratio. I think we'll get like a double bottom, maybe not that low, but you'll definitely get a retest lower. And then what we'd really want to see is some high volumes there to confirm a multi-month bottom, like the bottom in for the cycle. So we see a nice surge here in volumes on the weekly chart here. This is the ETH BTC ratio, but it's not quite as high as we saw at the previous bottoms, right? And it seems like it got a bit ahead of itself in the past week with that major surge up. So what
Mhm.
I'd really be looking for is a retest lower and then volumes comparable to say June 2022 or January 2021.
Okay,
Hard to disagree with
Ben.
that.
Yeah.
I know everybody was getting excited. Even I was kind of making not poking fun of it. I mean, this is just the reality of kind of what we do day to day is watch everybody kind of throw their narratives out, see what sticks, see if the price is trending alongside those things, see how much traction it gains, and then you kind of have to digest it. And yeah, when ETH BTC went ahead and made its reversal, it had some strength, and it kind of, let's see, let me pull up my price chart on that one. It kind of reclaimed its prior range. It was a bit of a confirmation, but is it going to continue on? I don't think anybody should be going all in on such a thing. But having an allocation that expresses what we saw, I think that's warranted.
I think so too. Like I'm not saying ETH is just going to go to zero from here by any means, but I think it became too consensus too quickly. I think there was like a rush, almost like a panic buying urge with ETH. Like I had saw this nice volume here, but it wasn't anything comparable to this, right? And that's really what I would want to see, to be like, okay, the multi-month bottom is in, and it's just going to be up only from here. And the way BTC looks, it looks a bit heavy here. So I think I don't think there's a world where BTC breaks down below 40K and ETH keeps going strong, basically. So I think there's a lot of downside risk still.
Okay, yeah. So what I'm taking from this, if we see a range for a period of time, that allows alts to have some breathing room, gain some ground. But if we see a break above 47K or break below 42, expect the liquidity to come out pretty quickly. You're not going to want to be overexposed in those markets.
Yeah, I mean, think of like Bitcoin as the safe haven of crypto. If we're going to have a sell-off and volatility is going to start moving higher, right? That's going to be where liquidity tends to be driven to. And especially with, again, this is a shifting market again with all these ETFs taking place. And if the volume is going to shift, the liquidity is going to move into Bitcoin, how is this interact with these new markets? And I have a lot of question marks still, and I kind of want to see some even mild volatility events and see how this unfolds to get a better idea of how this upcoming cycle is going to play out with volatility events. But it's kind of always observe, watch, and kind of bring it back to what and make subtle adjustments.
That's the big question in my mind, because typically if I saw the same structure and there wasn't the BlackRock and institutional effect, I would expect this to basically fall to the 200-day within the next couple of weeks, just based on what I'm seeing technically. The X factor here is that there's a lot of reputational risk if just a couple of weeks after these ETF launches and Larry Fink's on CNBC, whatnot, saying Bitcoin and crypto are the greatest things ever, if they go ahead and crash. So how much plunge protection essentially is there in the system? How much demand is there sidelined waiting for anything below 40K, 42K, etc.? That's kind of the X factor here. So not going to be outright bearish on this trend and expect it to just free fall the way it did in past cycles. I think there's going to be a period of adoption or adaptation, right? To where we have new entrants. The people making these markets now are much more sophisticated, have more ammo than our typical. It's not going to be what we're used to. I think there's going to be a lot of a learning curve here. So keep an open minded for sure.
Yeah, I think on Tuesday, just before the show, a few hours before the show, I think we were getting our signature Pablo alerts of just, basically an imminent dump is taking place, which tends to coincide with the dollar, which I think we'll hit on later. But, we had the sell off, and the type of signals that we were getting tend to kind of give us clues that the sell off is going to be a little bit larger. So I think some of these things are going to be changing in the coming months. I mean, even on Saturday, I think we were getting some reversal signals that price was going to start rising higher over the weekend in kind of lower liquidity conditions. And I wouldn't be surprised if later today we start to get different type of alerts after we see the initial flows.
Yeah, it should be interesting. I feel like there's at least one more squeeze in this, though. I do think we get back up to 45K or so, 44K.
There's the hopium for all those who are waiting to hear some good news from the bearish discussion.
But if we see that rise up and like the open interest and funding rates start going nuts, this long short ratio keeps rising, I think that's going to be very risk off there. I think it's kind of an exit rally.
It is hard to say how much reputational risk is on the line, how to quantify that, because does a breakdown to 32K really mean a whole lot for someone like Larry Fink? Is it just below that where things start to get dicey? I don't know. I don't think we know, but it's definitely something to watch. But I do want to take us to, I think, the elephant in the room, which is the Dixie. In fact, we even had a question on here from JB asking if there was anything, if we had any opinions on geopolitical risks and possible effects on crypto. And what I'd say to that, JB, it's a great question. I think on this show, we try and stick more to the data. We're not the geopolitical analysts or experts to bring some of those opinions, but sometimes that does get caught in when we look at the Dixie. So I'm going to ask you guys about that in a moment. But before I do want to bring up, for all those who just joined us, to say thank you for joining us. Thanks you for being here. If you've got questions, please list them in the chat. And if you haven't already, please hit the like and subscribe button. It really helps us do what we're doing by helping with the YouTube algorithm, which of course is a black box, but to the best of our knowledge, it's the best we can do to get this distributed to as many people as possible. And I want to bring up again, this show is today sponsored by CoinCall, which is a fantastic trading platform. And if you get something out of this show, you get trade ideas, peace of mind, whatever, and you're looking for a great trading platform to try, there's a link in the description. Give them a go. I think you'll enjoy the trading experience. They do options, they do futures, they do spot for all the cryptos that you're going to want to look at. Just a great trading option. But
Support.
I want to take us back. What's that, JJ?
Support. Thank you.
Support. Yes. Support as we look to build this platform. We've got big plans, a lot of ambition here, and we need you guys and our sponsors to help us get there. And lastly, if you know anybody who's interested in getting this information out, promoting products to the most sophisticated traders on the planet, reach out to me at Marconi White, social at proton.me. The link is in the description as well. All right, enough promos, guys. I want to take us back to the content and talk about the Dixie, because I think that is the elephant in the room if we talk about overhang risk. So JJ, walk us through what we're seeing. Let us know what you think this could mean for the crypto markets.
Well, first, let me point out our DXY risk rating metric. So this was giving us pretty clear green signals at 41K, and then we see that shifted to neutral right at the top there at 46K. And now we see it falling. You can't really see the yellow yet, but it gave us a yellow registered signal here, which is risk reversal in play. So this is really telling us that risk off is in the market, and it's lining up with everything we see in the Bitcoin charts too, as well as the Dixie. So as we were discussing over the past couple months, we were saying eventually this thing's going to slingshot, right? Like it gets pulled back, and then you see these impulse effects where it moves higher. And that's really kind of been the theme of the past, basically since January. It's kind of been an up-only trend. And we see this here on the daily chart, and it's now had a clean breakout above the 50 RSI mark for the first time since late July. So that's confirming the upward trend. We see this all on the technicals. It's broken above its Bollinger Band. The last line of resistance is right here at the 200-day MA, which is around 103.45. So above that, you should be very risk off, in my opinion, because things could get pretty nutty here, not just for Bitcoin, but markets in general. So this is a major warning signal if you see DXY start trending above its 200-day moving average.
So a question in the chat from OK6E3. Hopefully I got that one right, but it says, which Dixie ticker is the most relevant to look at, Dixie futures or just the CFD index? And I know, JJ, you just shared a proprietary metric, but how would you answer that question?
I just look at the index. So the DXY, just whatever that symbol is on TradingView here, DXY. Mm-hmm. And that's going to show you, I think this is basically your signal. Anytime this is breaking out, it's inverse for Bitcoin and markets in general. You don't want to be stuck on the wrong side of that. And what was interesting is on Friday, we actually had some favorable inflation readings, right? Or at least that's the way the market took it, is that it seemed like deflation's coming in. And we actually see this in the September federal funds futures rates, which had made new year-to-date highs. So this was kind of a major warning signal to me, in that we saw the federal funds futures rates breaking higher, which indicates low rates, right? But DXY, it sold off slightly and then it rebounded right away. So that's a major warning signal when price doesn't act the way it typically does. When things change in the market, you don't want to be riding that same trend. You don't want to be stuck riding the same trend that you were when all of a sudden the market structure shifts. So if we see these rates rising and DXY rising together, that's a very risk-off signal, in my opinion. Typically, when rates go higher, DXY goes lower. I'm trying to pull up the comparable signal here, but it's not working for some reason. But typically, anytime we would see these rates move higher, the dollar would fall lower. And when we would see them move lower, the dollar would go higher. Now we're seeing them move up together, which I think that's a very ominous signal.
When was the last time we saw that relationship?
Where they moved up together?
Mm-hmm.
We haven't seen it all year. I'd have to go back a bit further, but there's nothing in my recent memory where I saw DXY and rates dropping and DXY rising. Probably COVID.
Which is an interesting,
there you go.
Parallel.
That's quite a mention right there.
Yeah,
like
really.
The most extreme moments in the market.
You took the oxygen out of the room. Ben, our resident rates expert who could talk about rates for a 6-hour podcast, he proposed. What's your take on all that?
Yeah, I mean, as far as the geopolitical stuff, I'm not Peter, was it Zihan? I don't want to get outside of my niche here and start talking geopolitics. Just as I think crypto Twitter blasted him to say, stay in your lane. But, we won't digress too much there.
Yeah.
But yeah, as far as what's going on with the dollar, I mean, I kind of associate it with what's going on with rates and yields. And there's been a lot of correlation of late. I just pulled up on my chart here, and we can see this is the 30-year yield. And you can see there's a lot of correlation with this green line, which is the DXY index that JJ has been discussing. Last week, kind of seeing that we're going to have a bit of a mean reversion unfolding as our DXY risk metric kind of saying, hey, tune in here, take a look, what's going on. And so looking at there hasn't been many central bank speeches of late, because I was actually trying to dig in to see what they're discussing. And they've all been having this kind of conservative approach to monetary policy. And that was really all I could gather from reading what's been coming out of late. I think they've had like a month vacation, it seems like, when I go through all the timelines on their recent work. But that's the only message I started to see, which kind of brings me back to, I think, something I mentioned a few weeks ago, which was, I think the Federal Reserve is in a position to disappoint the market in terms of these rate cuts. I think we went almost overextended to how many cuts and how quickly that's going to happen. And here we're starting to see that DXY is starting to rise, which might mean that conditions are going to be a little bit tighter for the foreseeable future than what was expected. Is this more of just, again, a mean reversion? Like, we're not going to see a higher high here in the DXY. I don't think we have that setup taking place right now. Of course, if something breaks, all bets are off, but you can't really go into it expecting that. And really, the only other thing I had on my radar was at the end of this month was the Treasury will go ahead and discuss what they plan to do with kind of debt issuance moving forward. I think that's on the 30th. And last time that they mentioned it, they kind of said, hey, we need to tone back how much we're issuing on the 30-year. And you can kind of see this chart just absolutely nosedived. And that went hand in hand with the DXY. And so I think this reversion, and you get kind of on the 30th of this month, we might see some commentary, and that might set the tone for the rest of the quarter. And we also have to remember in April, we have the halving. And as we move into halvings, things tend to really settle down. They kind of they're a bit range bound. So if we do make a lower low on Bitcoin and dip below 40K, I don't expect to see a higher high hit until after the halving.
Yeah,
I agree with that as well.
Okay, I wanted to bring out Adrian Fluter. He mentioned his tinfoil hat comment here, which is that everyone's at Davos. And so everyone's a little quiet this week because they're drinking champagne at Davos and discussing how to run the world. Any comments there? Thank you, Adrian, for sharing that.
No, unfortunately, I have no insight into what goes on.
We're gonna go silent on that.
There's a lot of there's a lot of headlines coming up for DXY this week. So I kind of have the economics events calendar coming up. So today we have Federal Governor Christopher Waller speaking. Then tomorrow you see all of these different data points coming in, U.S. retail sales, etc. More Fed president speeches, the Beige Book. Again on Thursday, more Fed presidents speaking, initial jobless claims. So whatever way this rhetoric and the data points lean, I think we'll see a big move from DXY. One thing, I know we've painted an extremely bearish picture, but it is running into some resistance here on the weekly chart. So this is kind of our last hope, is that I think if this and the 200-day moving average can hold and DXY rejects from there, I think that would be the buy the dip signal for Bitcoin. But if it goes above, be cautious.
I want to wrap up this section talking about the Dixie, so we can talk a little bit about the Grayscale trust to ETF and some of the NAV, as well as get into the Degen trade. But before we do that, I want to talk just about how, coming back to the question, which was about geopolitical risk, which we're not going to necessarily talk on, but I think it's easy for people to be watching the news, be on X, and see the information coming in, be it something going on in the Middle East in terms of shipping lanes, perhaps the election that just happened in Taiwan, something else happening in Ukraine, etc. How do they look at the Dixie? Are they looking at the daily? Are we looking for multiple closes on the daily? Do you really just need to be looking at the weekly for that week to really confirm that trend? How should they be looking at that data point to really see how that geopolitical risk is going to manifest itself in that metric?
We're heading into the monthly close, so that's kind of a very important pivotal monthly close, in my opinion. If it closes the monthly above the 200-day, above 103.45, I would have practically zero long exposure personally, because I don't know how high this can go. And the risk of DXY, when liquidity gets low, it can blow off and cause all sorts of issues, not just in Bitcoin, but markets in general. And that is not the trend to fade. Like when the market eventually bottoms, there'll be signals, and it won't come until after DXY tops. So anytime you see DXY make a blow off top, there's always a window where it's falling, where you still get to buy the dip at low enough prices, but you don't want to be calling tops on it and getting into position too early there.
I'll jump in and just add, when you look at these kind of macro events, just consider what the supply and demand for dollars would be relative to what's happening in rate markets, because that is just a massive driver of the market overall. If you start to see rates rise, there's going to be more demand for those dollars to go ahead and kind of lock it up in these treasuries and go ahead and grab that yield. And with a lot of the kind of equity markets having a great run, how much upside is left there, where those dollars are going to be allocated to as rates start to rise, that kind of gives you this behavioral insight into what might happen with the DXY. So considering what these geopolitical events might do, what you might see, consider in the back of your mind, are people going to want to go ahead and have these dollars? Are they going to want to get those rates? What are the rates going to be doing over the next few years? Because we know that the U.S. Federal Reserve is looking to cut rates. And so if this 30-year yield is starting to rise, like that becomes kind of attractive to lock in if the expectation is we're going lower. Like go ahead, grab some dollars, lock them up. So that's also, as we bring this kind of to wrap up this segment, we're at 4.26 right now on the 30-year. Are we going to make a higher high here? Likely no, because we understand that the Fed is going to go ahead and start cutting rates this year. So how high can we go, right? It's capped. So keep that in mind. Like we think how high can the DXY go? If we're looking on this chart at some prior tops and you kind of see this big move right here that took place in September, right? Can we really get over this 4.5? Probably not. Are we going to get upwards and kind of blow past this prior sell-off point around 4.4? That would be a decent range to go to. But if we're going to blast past it, then there better be a big macro event that unfolds. Otherwise, kind of look at those expectations accordingly and then kind of think about what the market and the DXY would do.
One thing to keep in mind too, I don't want to go too far down the rabbit hole, but just to point this out.
Oh no. I'm getting my tinfoil hat on. All right, let's do it.
We've seen deflation coming up in recent reports, right? There's kind of all these signs that deflation is happening in markets. And when there's deflation, it causes a demand for dollars because suddenly your dollar can buy more than it used to. We haven't seen that priced into markets yet. But if deflation comes to markets, be that Bitcoin, S&P 500, et cetera, if that has to reprice itself for a macro deflationary trend, I think there's a lot of downside to be had in equity markets and Bitcoin in general. And we've kind of been so used to the inflationary trend, but things change. It takes a very long lag period, and we might be finally seeing the effects of 5% rates for whatever it's been 2 years start to get priced into markets now, and it could be rather scary if it happens in one fell swoop. So,
And you also got the BTFD by the that's
yeah,
coming due, I think, in March, right? To
RRP is
either
empty, so we're running out of liquidity.
Yep. RP is empty. They're going to have to address that. And then you got the kind of how are we going to address that likely happening on the 30th. There's a few things that have to be addressed. That's definitely going to cause
When there's
a little
not
movement.
liquidity in the market, DXY shoots up and volatility follows with it. So be careful.
So JJ just walked into the party, dropped a bomb, and walked out with his final comments on this segment. But to summarize, I just want to bring it back and kind of give a summary of what I heard in terms of what to look for. The monthly for the Dixie is really something to be paying attention to. We'll see. Obviously, closes. Until then, they can start to show what that trend is going to be. But that monthly is pivotal. And what Ben you said was really to be looking at the rates as well as we start to approach that moment. So this is kind of a critical time. And I would add that given the discussions we've had over the last year, these are really in some cases uncharted periods in markets. So it's definitely something to keep kind of on your mind as you're looking at this, is that we don't necessarily have a full picture of what that playbook looks like, although we definitely have seen something since COVID of how the Treasury and the Fed are going to operate. You guys just mentioned a couple of events that could trigger liquidity being taken out, possibly the opposite, and them needing to inject more liquidity into the market. So definitely, if you're a listener here and you haven't been frequent, I suggest you check in every Tuesday and Thursday. We're going to be reviewing this data and trying to give our best interpretation of where we think this is going to go. But that's going to wrap us up on the macro side. We're looking bearish. The Dixie's looking like it could add some more bearish weight to the market. But let's talk a little bit more about trades. Ben, I want to bring up, you had a tweet that you put out, I think just this morning, looking at the NAV for the Grayscale Trust, both the GBTC and ETH. Why don't you walk us through why you posted that, why you wanted to talk about it?
Because I've been listening to JJ for the past.
Oh, way to put it on your other the other analyst.
Yeah. Well, I mean, you surround yourself with really good analysts, and you basically just borrow and steal their ideas and make them your own. And so this is kind of case in point right here of me understanding that this NAV closed like we kind of all expected to. And for me, I have a portfolio that has GBDC in it. I've been playing the NAV, and I'm going to go ahead and move it into just a normal ETF for the accounts that I go ahead and use that allocation towards. And when it comes to ETH, same deal. Like you can see the NAV, it's gonna close up if we start to see bullish commentary when it comes to this ETF for ETH to be approved. I think it was in May is when it's coming due, right? We're going to see that NAV close up pretty quick. And sure, Celsius is still out there with a bunch of hundreds of millions of dollars of ETH. And that kind of lines up with what JJ was talking about when it comes to maybe forming a double bottom here or somewhere in that vicinity. And this trade still is to keep on the radar. If that does hit, look, increase your allocation to it. I'm not a financial advisor, but I see that negative NAV that has to close, and it looks pretty nice.
Another thing that's been dragging that NAV down is the FTX estate was loaded with ETH. So I think that's a reason why it isn't higher already, is because they're basically being forced to sell into this rally. So I think that remains a great trade. Short ETH futures, long ETH until we see that NAV
Do
close.
we have visibility into the actual sell-off coming from the FTX estate, or is it really just over-the-counter transactions?
I'm not sure. Let me see the volume. Oh, there's a nice bit of volume there on the 11th.
Okay. So Ben, I want to ask you point blank. There's a lot of narrative right now around Ethereum being the next ETF, expecting that to come this year. Is this a dollar cost average opportunity into ETH going into that event? Is there a different play in your mind, or is this kind of hands off until maybe we see some capitulation, bringing that price down even further?
Yeah, I made a fun account probably about 12 months ago, and I just did a very simple approach where I went ahead and said DCA, allocate a certain amount of dollars every Friday and just stuff it into Bitcoin. And I did that. And I did that for a while. And then eventually I think Bitcoin finally surpasses 200-day moving average, and I shut it off. I was like, okay, that's it. Market's going to run for a while. And my next move, I want to do this in a very simplified approach. Like, can I go ahead and in 5 or 6 trades actually make enough to go ahead and do a lot of rental work that I've been wanting to do around the house? And that's kind of been my goal this cycle, is can I simplify it to where I can do it in half a dozen trades, get a goal in mind and accomplish it. Right? That's just a very simple goal that I think that I can accomplish. And as far as where that goal is at, I've moved about half of that allocation of Bitcoin into ETH on that recent move. And if we get the event that JJ kind of talked about earlier, then I'd probably go ahead and get closer to 100%. And then after that, my next move is just small little allocations, probably into narrative tokens. And that's about it. My only hedge on all of that conversation is really if the volume on ETFs, like for me, I think it's going to take a little bit to get all these flows into these ETFs going. Like it's just the engine is starting. We're seeing all the marketing pick up. And if that starts to pick up in terms of spot volumes across the market, it's kind of your cue like, hey, this is going to run hot. Like this Bitcoin milkshake moment might have another coming. And so we need to just be aware of it. And if it does happen, then act accordingly. Okay.
I like that. I seem to recall someone putting together a video maybe about phases and moving through these from Bitcoin to Ethereum to meme coins.
Yes, I am attempting to synthesize that in a simplified approach where it's 5 to 6 trades. Yes, that's exactly the case.
I love it when the analysts actually eat their own dog food. That is the way it should be, the way it is. And okay, so I think for those who are asking, is this a good time to DCA? You just heard from Ben sort of a perspective you can consider. Again, none of this is financial advice. We are just a bunch of cartoons on the internet. This is all for entertainment, just providing our opinions. So please do not come back to us and tell us that you're upset with the trades. These are your trades and your trades alone. We're just providing a perspective. Now, every week on this show, I am asking you guys for trade ideas, and JJ, who's stuck on Joker, may have some, but not today. Today, I'm not going to be asking for that because I think what we heard from JJ was that and from Ben is that the market's looking a little uncertain and a little bit of bearish. We don't know about the Dixie, so I don't want to be asking about trades. What I do want to ask JJ is about your DGen trade from our sponsor CoinCall. What was the trade you're looking at from a DGen perspective that someone could look at and just go YOLO?
Yeah, so full disclosure, I'm not in this trade personally yet. I would probably wait for a move higher, or if I see DXY fully break out above 145 following the economic data this week, that's really when I would be entering. But if you're a DGen and you want to get some action, I think these are great risk reward options here. I'm looking at the February 22nd put options here on CoinCall, and I think anywhere in this 36K to 40K region. So the lower you buy, the less upside you have if we get a downside move. But you could buy these for basically 600 per Bitcoin. You could buy a fraction of it, so you could buy a tenth of a Bitcoin exposure there for around $65. And then if we get a downside move to the 200-day, which is around 32,000 in February, these will net you some handsome profits. So anywhere in this 36 to 40K region puts, expiring on February 22nd, I think those are great trades. The risk reward here, the IV levels are low. I think that there's a good chance that we see the downside manifest over the next few weeks, and I think you'll see the gamma effects really start to multiply if we get a break below 40,000. So these would net you some handsome returns if it hits. But mind you, this is a gem play. So
it's called the Degen play for a reason, right?
Yep. It's a lottery ticket. So nothing more, nothing less. There's a good chance that they multiply. There's also a decent chance it goes to zero. So do your own research, but I think there's good risk reward to be had there.
If you're willing to bet at all. Okay. And look at that beautiful, as I said, elegant interface to coin call. If you're interested, you can find the description.
Too.
What's
zero
that?
Zero spread trading. So
look at that.
Feature there.
Can you explain that for the audience who may be asking what that means?
It means that they're stepping in to meet the difference between the bid and the ask. So there's not a huge gap there between, like, you buy a contract and then you have no counterparty to sell it to. So if these things start to multiply, you'll have somebody that's willing to take the opposite side of that trade, it seems. So
fantastic.
Good feature.
Fantastic. All right. JJ, any other Degen calls you'd like to share with the audience who may be looking for something a little bit on the exotic side?
If you wanted to hedge those and prepare for some potential upside, let me look here. You see, the upside is pretty juiced. Like, the implied volatility levels on the upside are still seemingly high. There's a lot of premium in these. So if you bought right now I'm looking at the February 1st contracts, 45,000 is trading for over $1,100 each. I think that's too much premium. I think it's a trap. We could get up there and they could multiply, but I think your risk reward is very much skewed on these. So I'd be staying away from calls for now, unless you were doing call spreads or something or other where you're selling this and buying something longer dated. But I don't really see the risk reward there yet. I'd wait for a move below 40K to start looking for some long call exposure, but I don't really see a signal yet to jump in there. I think it's a bit predatory. So staying predatory. Away. You see, like, right. I actually ran last week. I was looking at my 2023 trading returns, and what I've realized is I'm really good at catching these moves, the short squeezes, right? Yep. So I'm good at capturing this, and then if I would have just stopped trading if I would have traded January to March, May to August, and October to December, I would have had like 17.5x returns. But I'm stupid and I continue to trade in this chop period. So I've learned my lesson, and this is not where I have an edge after the market's made a top. Like, I'm keeping hands off for now. Full disclosure, I'm not entering these trades right now. So this is not my edge period. My edge period is finding the big moves before they happen, riding it. And now I need to learn to get out. So,
you know,
I put out retarded each.
I was going to say, I put out a tweet earlier this year and said, patience is the word for 2024. And I think about what you just said, being able to sit on your hands for months at a time, waiting for the right moment to take your shot. That's not easy for most people. I think even people that are sophisticated traders like yourself.
You have to get burned to learn those lessons. Not been burnt bloody, so trying to learn a little more each time.
Or tune into the trading pit to find out, find a community of people that can help you walk away from the screen when you need to.
Yeah.
Sure. All right. Okay. I think with that, unless Ben wants to get in on this Degen trade, I think we're ready to wrap up. Anything to share, Ben?
I would say just, if you can figure out how to cue into every one of Larry Fink's comments to the public, then that's like a Degen trade for you, because he just went ahead and now he's talking about tokenization. So he's already got his eyes on the next ETF and he's queuing up the narrative machine.
He's out there sounding like Michael Saylor. It's incredible.
It is.
And
you couldn't write this any better.
No, you couldn't.
I mean, like, for all the bearishness we're talking about now, I don't care if we get a break below 30K over the next couple months. It's still long-term bullish. Like, just
structure has to really break down here, and you can get a good sell-off and it still remain intact.
Yeah.
It's going to 100K long-term. Just keep your focus on that.
Keep your focus. That is a great way to wrap up the show. All right. Well, that's going to do it for this episode of the Trading Pit. This is Marconi White. I want to thank JJ. I want to thank Ben Lilly for showing up, dropping the alpha. And for everyone who showed into the live show, thank you for sharing your questions, sharing your attention. We really appreciate it. Again, we're going to be going live Tuesdays and Thursdays every single week going into 2024. That's how important this year is. You're not going to want to miss it. I'm telling you, the opportunities are there. We're going to be talking about them. And as I wrap up every show, I'm going to say the same thing. Keep some dry powder. Stay safe out there. And we'll see you next time.